Hello traders, Greg here with a market update. Okay, the US-Iran situation is an absolute mess. Yesterday, Iran and the US were supposed to have peace talks in Islamabad, and the Iranian delegation pulled out at the last minute and did not turn up. The reason being is that they said that the US has constantly been violating the cease agreement, and it's very hard to have negotiations when one party is doing that. And the main point of contention is obviously the naval blockade of the US, and they are calling that as an act of war. This has all been happening with obviously the ceasefire only 24 hours away, but Trump immediately delayed the ceasefire, so continued the ceasefire, and basically now there's no end date to the new ceasefire, but Trump was basically saying that now he waits for Iran to come with a proposal, and on the back of that they will decide on what to do next. So the current situation, again, it's the best way to describe it, really, it is a mess. So we don't have peace at the moment, but we are not at war either at the moment, and obviously the market is very confused about what's going on, and waiting for some more headlines and for some more developments to see whether or not this breakdown does escalate further. So look, how has markets reacted? So looking at crude, which is the most important market, crude overnight was actually up 5%. And the key takeaway is that if we keep delaying peace, we keep delaying the open of the Strait of Hormuz, what is going to happen is that we are going to continue the supply disruption to crude. And obviously that is not something that is a positive, and increasing the, and so it's hard to see crude prices going lower when obviously this continues. So to see crude meaningfully lower, really, we're going to need to see peace, and also that the Strait of Hormuz is officially open. So we have crude back at $90. The low last week on the back of a lot of optimism on the peace negotiations, etc., was around about $80. And I'd suggest that the risk for crude is that yes, this does escalate, and that crude does spike a lot higher. Then the risk is for crude trading lower, because certainly there is going to be a floor for crude lower, even if the Strait of Hormuz was open today, because that supply disruption is not going to go away anytime soon. So look, buying crude on dips, it's working. I think that's the best strategy moving forward, and just maybe keeping a small long. For equity markets, yes, S&P and Nasdaq did close marginally lower overnight on the back of what happened. But obviously Trump saved the markets with extending the ceasefire, and they are still within kissing distance of record highs. So absolutely phenomenal performance by US equities still. But one thing they have ignored, and they've ignored crude and potentially the economic damage that higher crude prices eventually are going to deliver. If crude continues staying at obviously these elevated levels, then that's going to feed into inflation, slower economic growth, and potential recessions, etc. So look, at some stage, I would imagine this disconnect between what's going on in the equity markets and what's happening with crude is going to end. So chasing the equity markets up at these levels, it really doesn't seem wise. In the precious metals markets, we did see quite a decent move lower in gold and silver. Seems as if gold has found some pretty stiff resistance up around that 4,800 area. And one thing just to keep in mind is that gold and silver have been trading as risk assets during this war crisis. So if we, in the last few weeks when crude has trended lower. Gold and silver have gone up, but now crude seems to have found a base that is putting a ceiling on gold and silver. So crude goes higher, I would not be buying gold and silver, but doing the complete opposite, selling both. US dollar market really wants to sell US dollar badly, but every time it looks as if the positivity is going to allow them to do that, then we hit a roadblock like we've hit now, and the market goes back into buying safe haven USD. So DXY really, it's been in a wider range for a very long time, like 96 up to 100. We're around about 98.5 at the moment, so it's still a messy trade. We haven't had a directional breakout on either direction yet. But anyway, look, the key takeaway is at the moment is we've got a very confused market that really at the moment is waiting for the next headlines to get direction. So there is a lot of uncertainty out there. So anyway, stay safe with your trading, keep your soldiers alive, and we will check back in with you shortly.